Okay, so let's just readjust that that fib to where it was.
I'm sorry about all the interruptions, Costa, man.
It's fine. It's good. It's nice to have. It's actually great talking about this and having the opportunity to, well, to talk about it, because when one does that, you know, you sort of are checking yourself at the same time. I don't share much on Twitter, and it's mainly because I have a smaller circle of people, not that I work with. I would say, there you go. So I asked my my mentor, do you work in a group? Do you work in a group? And he's no, what he called himself, a lone wolf. And I thought to myself, I like that, but I also like people. How does that work? And there's another lesson here, I think. When you put this sort of work in, we talked about confidence earlier on. If you spend the time, you put the hard work in, you know, what do they say? Is it 10,000 hours or whatever it is? But if you put the work in, any mistakes that you make are the mistakes that you've made. Whereas if you follow other people's trades or do what other people are doing and they make a mistake, it's going to cost you money. And you've got no one to blame, you know, in kind of in that scenario. So I much prefer it the other way. And actually, I didn't used to, if I'm honest, but now I do. That doesn't mean to say I wouldn't, I do put the odd chart out on Twitter. We have there's a small group on, do you know, Telegram?
Yes, I've heard about it. It's like an alternate Twitter, right? Or it's a Twitter, but
it's more like a chat app, like WhatsApp or that kind of thing. There's a couple of people on there who I share with and who share with me, but I would never just take a trade based off someone else's chart. I don't, you know, even if you're sitting there, I'm not taking that trade off your chart. I'm, you know, looking at my my own work, because I want to be responsible. And if it goes wrong and it's cost me money, then that is a learning exercise, that whatever the cost of that loss trade is. And I don't want that to be on someone else. Yeah. So there we are. We have fibs, PRZs. What else are we looking at here? Actually, not that one. Okay, so I'm just going to actually leave that there. Clean this up a little bit.
Great usage of TradingView, man. It's fun seeing somebody deep diving. That's another thing. Like professionals, they always have the best tools to do their work, or they learn their tools, you know. So any trader guys out there, go fiddle around with TradingView. It's like there's all these tools you could in practice, because the more you're accustomed to using your tools, the least friction you're going to get when you have an idea, right? Oh, okay, I think I see a W. Then you know exactly where your tools are. You're able to measure them fast, and it's like you don't waste time, and you're not scared of doing that exercise, right? If it's hard to use your tools, then you might it's going to take me time to draw those lines. I'll just I'll just play in a different way, right?
That's a great point, Patrick. And I think that the best way to kind of go about that is sort of in your daily work, then in your charting work, in what it is you're doing, but maybe make us kind of a contract with yourself whereby you say, you know, actually, you know, we've got all of this, you know, all of these tools, these different things over there in the toolbar. You know, a lot, probably, you know, there's only a few things in there that I'm interested in. in that particular group of tools, right? They're all of it. I'm interested in all of that. I'm certainly interested in most of that. We have a harmonics there. I'm not actually sure what this one is. The 3 drives I'll use occasionally. The head and shoulders, all right, it's not harmonic, but it's a something that's valid. If you're getting into your Elliots or whatever, say if you draw in individual lines, you can kind of group things. And if you're getting into that way of organizing your desk, right? This is what we're talking about here, then recall will be much easier, as would be the way you organize your charts. I actually had a disaster not so long ago. TradingView. So how did that? So what happened was, if we got time for this. So I it was when I moved from one computer to the other, I had to put passwords in again and go through all of that process. And when TradingView loaded, it was different. And I was like, oh, what's going on here? It was, it's just the color. So you right click on the screen and you just trying to change it. It was like, great, okay. And then you carry on going, but where's my work on? It's not just the color, there's other things going on here. And then I discovered, I'm not going to do it now, but layouts. And I inadvertently created a layout. And I didn't realize. So all my work was on this kind of other layout. But anyway, it's I now see the advantage of layouts, which I do use.
Layouts are great because if ever you want to redraw completely different on the same instrument, just create a new layout, and TradingView is going to attach all those drawings to that layout. So you could have a layout which is like whatever test, and then you could make copies of that. You could make 10 copies of all your lines. Like you just copy the layouts and So I'm happy you found sometimes I inadvertently look at my all layouts out and have like about 10 unnamed layouts I didn't even realize I created. And my drawings are, for those charts, they're stuck in that universe, in that layout.
Yeah, I can totally relate to that. I mean, something like that happened to me as well, but I know that I've got 2 very important, well, maybe 3 very important layouts. Setups, something called setups. There's one I use on a particular time frame, and my first unnamed layout, not all the other ones. Okay. So we've got something going on here. We've taken a measurement. Where are we? So we have another pattern. Now, I just say at this point, I think it's worth noting at this point, when we talk about where we start the X point of the harmonic off, your viewers might say, well, actually, Pat, shouldn't that have been more up here? These things are not perfect. And for me, there's a significant enough swing or swings taking place between this area here that gives me the confidence that actually I'm going to take it from there. I'm measuring from this point here. Am I making sense?
Yeah, and I always wondered that. I said, so all that work, those ups and downs, those fractal patterns, or bats or Gartleys, then it kind of makes sense that has created enough congestion that the new move will be disregarding that, and then you're starting some fresh action that's starting where you marked it D, right, all the way to A, the new bat. No, that's a bat. It's a bat. No, that's not the bat. That's I'm confused. The W is the Gartley.
Gartley.
Okay, W Gartley, and the M is the bat.
The M is the bat there in this instance, yeah. It's just, I mean, the bat uses, and the Gartley and all these patterns use the same the same measurements. You know, as we said earlier on, we have the W's and the M's. The M is bullish because the reversal zone is kind of this area down here. I mean, let's just draw it. Let's play. Okay, let's get a clean area of a chart. How are we going to do this?
New layout.
Sorry?
And you could create a new layout in TradingView.
Yeah.
Or that.
I'll do it this way now.
Okay.
We have a W. A slightly different one. And an M. So the reversal zones. These areas, right? We sort of talked about that earlier on. So the M is bullish. It's a bullish setup. And the W is a bearish setup. That's just the way I remember it. It was the way it was taught to me. And not only that, you know, that's what we see. That's what we see in the structures. W's, M's, all constant. You know, they may be lopsided, they may be leaning over, but essentially, you know, we talk, you know, these are waves, right? Yeah, the legs are the waves, I would say.
Okay, X, A, B, the B to C, is it always lower than the X to the A, the highs? So that retracement from B to C, is it always a lower high? Yeah, the M, the second part of the M, is it, or it can be a higher high, right? Or
Yes, it can.
It can.
That's another pattern.
Oh.
So, I mean, this is a big subject. Okay, so we've looked at a bat and a Gartley. Okay, within that structure, sorry, that structure type classification, let's say, but there are others where the C leg extends above the A, very, how can I say, rangy. I quite like those patterns. Actually, they look like this. So I use a cipher tool for that one because actually let's just to show that we've put a fib right across that. I mean, that's awful what I've done there, that W right now. Hey, whatever. But I guess when I draw on top of that, the A, B, C, D, so just for posterity, you know, we're seeing the measurements that the tool is giving us versus the Fibonacci. And in time, you get to see these forming, you can just see them. You know, I mean, I use the tool, the fib tool, and I'm constantly using that, you know, for confirmation and so on, but you can see that in the structure, in the action. In terms of this pattern, that's the structure. So the fib is different. We're making sense.
Yeah, and what's the okay? That I'm confused. That cipher tool looks just like the XABCD tool. Why did they create a different tool? It's the labeling, not even, right? It's
because of C. C is extending on the Fibonacci beyond XA. So it's not a retracement. Sorry, B is a retracement, but the leg B to C has pushed beyond A. Remember we spoke that the C point is always in that 0.38 to 0 range, 38.2 and 0, whereas in the cipher or the shark pattern, it's extended, which is why that book is so good, because you get to understand about the different the different, how can I say, what the expression tells me in terms of an extension as opposed to a retracement. Retracement, it retraces back somewhere between 2 points, but the extension means it's fully retraced and extended. Does that make sense?
Yeah, it does. And yeah, and those, it's like in classical TA there, we call them like, let's say false breakouts, and they trap everybody. So everybody thinks, let's say it's going down to the basement with that D that extended, but essentially it's just, it traps everybody and the market shoots up the other way, right?
Which is what it looks like, right?
Yeah, man. I see. It's crazy because you named them a certain way, well, harmonics, but that's why I never judge anybody's trading framework, whether he does Elliott waves, Fibonacci harmonics, or classical charting, because we're all analyzing the same damn thing, right? We're trying to observe what's bullish, what's bearish, where our setups, and we have different terminologies and techniques. But that's why we should never judge. Like I'm only going to judge somebody if he doesn't respect his own trading framework. Then I'll get upset because he's making a disservice to himself. But it's beautiful to see that because, yeah, you're seeing some people say that's super bearish, but essentially that could be super bullish, that setup there. Well, at least to complete that leg from C to D, then it's a reversal.
Yeah.
Downwards, right?
Yeah. So your reversal is from here. I was going to say, but I stopped myself saying it. So does experience tell me this? I don't know, is the answer. But the word that popped in my head was continuation. Okay, so the move D has not, it's quite not got there to X. Yes, we had that C extending beyond A. So it's a question. Actually, it's a question. Are we looking at something that's possibly continuation? Am I making sense? Might you see, for example, a continuation? There's no point in looking in my oscillators, but would we see that as a continuation move, a sort of a continued hidden divergence, for example, on the, whatever oscillator?
So I guess the use of an oscillator is you're probably using it all the time to try to get that extra confirmation, right? That hidden bearish divergence or divergence. I look at it. I love that stuff, man. When an indicator refuses to go higher, but the price goes higher, then I don't trust the price. So you're using that all the time, right? As an extra step.
At each point, yeah. And it's worth also, so we all work on different time frames. But that doesn't mean that we can't reference another time frame, right? Situational awareness. If I'm like at the moment, I'm heavily trading the DAX and the various other, they've been very good to me. But once you've spotted the trend that you're in, there's your situation, right? And then you're looking to align your oscillators and the signals that they are sending you with specific points, on your or with your harmonics. We're going to look at that. I prepped some stuff for that. Although whether we get around to it today, Pat, I don't know. If you're up for another session at some time, I definitely am.
We'll definitely do another one, especially Kevin. I feel so bad that he's not there, but we're definitely going to do this. We're going to continue this saga Costa there. We're not done. This is crazy stuff, man. This is like Pandora's box for me. Like a kid at a cookie store.
I love it.
But you're right about that situational analysis. And I try to hammer that every time for like new chart traders. If let's say on the monthly chart, you're in an uptrend, then you're going to look for reversal patterns that hit that upper trend, that hit that, let's say that rising trend line, or you have let's say yearly defined uptrend. If you're hitting it there, don't think you're going to go through it on that smaller time frame. Try to play the bounce of that higher time frame's momentum, right?
Absolutely. I mean, that's where, Fib is great for me on those, or Fibonacci is great for me on well, it can be great for anyone on that. There's also something else that I use, which is around volume. So I align some of my when I say volume at price. So I'm looking at session volume, which is quite useful. So that's kind of giving me the smaller time frame look. Well, it's smaller. Actually, I should say this correctly. I'm in a smaller time frame, but because it's a session, which is, depending on what that session is, 8 hours, 24 or whatever, I get to see the volume at price within that session. And that creates for me, a point, the POC, the various POCs. And, which when I use that with my harmonics and my VWAP, I mean, that can be really quite potent. You could sort of, not every time, and I wouldn't do this all the time, but there have been times, and I'm really quite confident. All right, my risk is my risk. I'm never happy to lose, but it is what it is. I accept that can happen. And I put my trade on. I think, right, I like to cook. I'll go and spend some time in the kitchen. We go for a walk or get my guitar out or whatever, just to kind of get away from that. But yeah, it centers for me, or the harmonics are like a guide then. And it's something that when I use it with something else, whatever that is, we've talked about divergence, we've just now mentioned, session volume, or whatever, I find that I'm in a good place. I'm comfortable with that way of trading. I'm confident, and I can go about my business. I know there's going to be good days and there's going to be bad days. Good trades, bad trades, but overall, I have to say that it works for me, and that's the important thing, being consistent. There's aspects to that as well which are not harmonics. Okay, people say, to be a consistent trader. For me, being a consistent trader is my account growing. That's what being it's not winning trades or losing trades. It's the account growing, and it's how I manage that. And there's your relationship, right? So we talked about profits and trade management earlier on. They are rules which are good for me because it allows me to do that. And if I am more, if I have more winning trades than losing trades, it's, that's what I want. Okay. I must apologize, Patrick. I have the tendency to occasionally go off for a little tangent. I do get excited about what I do.
I do that all the time, man. I get sidetracked, and some traders, we have peculiar minds. I don't know, I don't want to put you in my bucket, but gee, we're just a little offbeat. And to look at charts all day, even my girlfriend looks at me sometimes and she says, Jesus, who does this? We're a rare breed, because you go at a party, what do you do? I chart trade. What? It's oh, you're in finance? No, I analyze chart. It's such a, we're in a mind. There's not a lot of people doing what we do there. I don't think so.
No, no, I just actually on that point, I think it helps to have, or to sort of be wired in a particular way. And I'm not coming at the psychology aspect of trading there. I actually mean an interest in, as I said it before, how things work. Yeah. So you constantly trying to understand it, and markets change as well. Let's not forget that, right? And there's always a surprise waiting, or the market will give you a lesson. It certainly has to me. But again, if you know that that's going to happen, then it can't hurt you, because you will be in a position, one, mentally, where you can handle that, and two, from a risk and money management perspective, where, you know what, it happens. We move on. And why not? Let's move on now, yeah?
Exactly.
Okay, so we've got this Gartley. Let me. Sorry. Why are you doing that? I locked my chart. So what's happened there? Have I locked my?
What do you want it to do? To move the
It's locked.
there you go.
My mistake, sorry. You know what, might be a good idea at this point to actually I know mainly I draw my I've showed my fibs like this, but usually I like my chart pretty clean on something that I'm working on. So I'm probably there. You know, this is what I'm looking at, right? So I've decided this is a Gartley, this is worth entry. You know, we're looking, how can we enter that trade? There's various ways. You know, we can wait for it to break below. We can look at volume. We can do various things. There's one particular thing that I like. Tweezer top there for a start. So we got this swing here. Yeah, we've had this move up, come back down, back up, down, and we're coming up again. I'm just going to mark that. Actually, just make a note something. 23rd December at 2 o'clock. I'm going to reset my, I just want to zoom in. What's going on? Damn it. Okay. This isn't brilliant, is it? So what I'm looking for here, Patrick, is how am I going to enter this trade? I've seen this here, right? I'm assuming this structure is forming. I've got a previous high there. I've broken it with this candle here. Now, I would normally, under these circumstances, be drilling down in time, because what I'm looking for is how I probably would have got stopped out, actually, but what that might be, you know, what's that candle made up of? Is it made up of, is it something like that? You know, we don't know unless I'm drilling down, because what I'm looking for is the low of that, and that might give me a trigger to enter that trade. Clearly, as I can see, that's not happened. So I might have, well, not might, I probably would have got stopped out. So therefore, we're moving over here. I'm still in the reversal zone. So how are we going to do it now?
The reversal zone is the zone where you have to wait until it plays out, because you're still you have that reversal harmonic that's telling you eventually this thing should drop to in between 38 and 61 Fibonacci, right? You're still waiting for that possible play, or it's too late now?
No. So yes and no. What we're looking at is a reversal. It only has the potential to hit 38.2 and 61, so on. Okay.